Let's go to question 2. Beginning balances were assets of $100. So I'm going to put my beginning and my ending and my change here for each of these accounts. And I will put in the information given. $100 beginning assets. Capital stock had a beginning balance of 10. Retained earnings had a beginning balance of 50. During the year, assets increased by 60. Liabilities increased by 20. And capital stock increased by 40. If the company recorded $10 of dividends, reducing retained earnings, and $90 of revenues during the year, compute the following: ending retained earnings. So we are looking for that piece of information right there. Net income, we are looking for this piece of information right there. And expenses, that piece of information right there. So I'm only going to put a box for the missing information. Can we solve for any of these right off the bat? The answer is we really can't without some additional work. You need to look at each of these as a formula. There are horizontal formulas and vertical formulas. Horizontal uses the balance sheet equation, and vertical uses the idea of beginning plus change equals ending. I'm going to solve for this horizontal expanded accounting equation. $20 of liabilities plus $40 of capital stock gives us $60 plus something equals 60. Well, that something would be 0, and mathematically that works out. Retained earnings didn't change. If retained earnings didn't change and we started with $50 in retained earnings and it didn't change at all, then that must mean that we ended the year with $50 of retained earnings. Next, so we'll put that in. Net income for the year. If retained earnings didn't change, and the basic formula for retained earnings is your beginning retained earnings plus your net income minus your dividends equals your ending retained earnings. Beginning retained earnings are 50. Net income, we don't know yet, but we do know our dividends are 10, and we do know that we ended with 50. If you just solve for the unknown, as we've shown all along, 50 plus something minus 10 equals 50. Net income has to be 10. It goes up by 10, and then they get all paid out. They go up by 10 because you earn some net income, and then you pay them all out in the form of a dividend, thus leaving retained earnings at the same $50 that you began with. So this would be 10. The formula for net income is revenues minus expenses. As you can see here, revenues minus expenses equals net income. We know the revenues to be 90. We don't know the expenses. That's what we're trying to find out. And our net income is 10. 90 minus something equals 10. That has to be expenses of 80. Let's go back and look at our question. Net income for the year is 10. And expenses for the year are 80. If you wanted to, you could go ahead and solve for all these other unknown pieces of information. Although it wasn't required, I went ahead and computed the missing pieces in the remaining portion of the expanded accounting equation. If you take your beginning assets plus 60, you get 160. In order to determine the liabilities, we had $100 in assets, 60 of which is claimed by the owners, therefore $40 must have been funded through lenders and creditors. Once we have that, then we can continue to work our way down. Capital stock started with 10 plus 40 gives us 50. Liabilities, we just computed 40, so 40 plus 20 equals 60, and those are all the numbers. Hopefully that's helpful to you, but you need to be able to see the big picture of the expanded accounting equation and solve problems such as this. We're going to have lots of quiz questions on it. Aloha.